Hi. Do you have any crypto? I'm sure if you've got some crypto, you may have made some profits. Do you know how those profits are actually classified according to the tax law? Basically, they're an asset and they're taxed as such. During this part 1 video, I'm just going to go through 4 key points to remember and to learn about. What are good cryptos? What is a good strategy about purchasing those? How to maximize your growth? And of course, most importantly, what is your exit strategy? My name's Andrew Squilari. I'm a digital asset strategist. I've been involved with crypto for many years now. I've purchased a lot of crypto and I've cashed some in and I've paid the appropriate tax according to the sale of those assets. This YouTube is not investment advice, financial advice, or trading advice. Make sure you do your own due diligence, consult your advisor before you make any investment decisions, making sure that your advisor does have crypto. If they don't have crypto, they don't understand it properly, and they're only giving you an opinion, not professional advice. Now, number one, what is a good crypto? Now, unfortunately, there's over 7,500 choices, and many people get told about this coin that's going to go up 1,000 times. Warning number one, don't take a lot of notice of that. Many people get told if you buy this particular coin, you'll get a monthly or daily or weekly return. Again, another red flag, don't go there. What I've done is bought portfolios of blue chip coins. Litecoin, Ethereum, Bitcoin, and some of our exchange coin called the DACXI coin. This is the bundle program that I do. It's a diverse portfolio of blue chip coins. And over the last 18 months, while this program's been offered, it has consistently performed much better than purchasing individual coins, especially for inexperienced cryptocurrency customers. The other program, which I highly recommend that I've done, is also buy precious metals. Precious metals as a token. Now, there's many advantages to buying precious metals as a token, as a cryptocurrency. So there's cryptocurrency token for silver, platinum, and of course gold. These tokens can be transferred between us really easily and for free within Australia. And of course, part of this bundle, this precious metal program, is the DACXI coin. Both these programs, you receive an additional allocation of DACXI coins. So there's a good customer incentive for buying those particular programs. Now, the other program that I've bought into as well is the DACXI program. The DACXI coin is the coin that is used on the exchange for crowd financing. It has a really big future. It's got a great use case. It solves a very big problem globally. And of course, whenever you look at a cryptocurrency, you've got to make sure its use case is solid, the company's solid, and it has a lot of growth potential to get involved with it. And I believe the DACXI coin does have those 3 key factors when you purchase this particular coin. Now, what is a good strategy behind your purchasing of cryptocurrency? Determine your goals. Number 1, short-term, medium, and especially long-term. Stay within your risk profile. If you're really risky, well, then you make the decisions according to that profile. If you're a long-term, safety-conscious person, then, of course, the blue chip bundle and the precious metal bundle may be more attractive to you. But make sure you stay within your risk profile. Diversify your portfolio is always an important strategy. We've done many studies over the last couple of years and found that diversifying your portfolio, getting a blended portfolio of different assets within cryptocurrency is always a smarter way to getting involved with cryptocurrency. Now, lastly, only buy what you understand. So if this is the first contact you had with cryptocurrency, make sure you understand each of the use cases of the coins that you're buying. Do some research, find out what their market cap is, what their potential market cap is, and making your decisions according to more knowledge than you have today. How to maximize your growth is also really important. And many people think that just going and buying it on any day is a good idea. Well, it probably isn't. So if you're going to buy some crypto or even sell some crypto, dollar cost averaging is really important. Making sure you buy consistently over a period of time to build up your portfolio. And when you want money out of it, you do exactly the opposite. You sell a little bit over a period of time. Cryptocurrency is highly volatile. It goes up and down a lot, and any day that you choose could be an up day, a stable day, or a down day. And there's no way of telling. You just get a feeling for it after a while. But in your initial journey into cryptocurrency, it can be quite a scary ride, seeing the prices move a lot, but we are long-term investors of crypto, so the ups and downs don't concern people who are looking at long-term wealth creation. The second part of maximizing your growth is actually good tax advice. I don't think that you can get away with not telling your accountant about what you're doing in cryptocurrency. That is essential. There's a report out there showing from Independent Reserve that 16% of Australians have cryptocurrency. Yet through the many conversations I've had with accountants, less than 1% of their customers are telling them. You can't not tell your accountant. You have to tell them. If you don't tell them, you're evading or avoiding tax, but you really need to employ very good tax strategies around the profits that you are making in crypto. Now, do you understand what capital gains tax is? This is put out by the ATO. It's a really good little video. I'll go through it right now.
Capital gains tax, or CGT, is a tax that is paid when you sell an investment or asset for more than it cost you to acquire it. For example, you may be liable for capital gains tax if you sell shares, property, a banana ice cream business, Bitcoin, or a contract for more than it cost you to buy it. Capital gains tax is different from income tax, but they are both paid in your yearly tax return. For example, Georgia buys a parcel of shares in a bank for $1,000 and sells them for $1,500 just 6 months later. That's a capital gain of $500, or $1,500 minus $1,000. Georgia also receives dividend income of $100. Georgia will pay taxes on $600 in total. That is, she will pay taxes on both the dividend income of $100 and the increase in the value of her shares, which was $500. If Georgia's marginal tax rate is 20%, she will pay $120 in tax for her investment, or 20% multiplied by $600. Individuals can claim a capital gains tax discount for owning an investment for more than 1 year. For example, Georgia would pay tax on only half of her capital gain if she owned the bank shares for more than 1 year. For some assets, you won't be liable to pay capital gains tax. For example, capital gains made on the family home or a car that was used for personal reasons only. However, if you use your house as a home office or workshop, or use your car to make money, like driving for Uber, you will be liable to pay some capital gains tax when you sell. It's always a good idea to check with your accountant if you're worried about paying a large tax bill.
That's a great little video explaining a little bit about capital gains tax. So just to reiterate what that video says, you have an initial purchase, you bought some cryptocurrency. Of course, over a period of time, it's going to grow in value. Some of that value is principal, which you first purchased, and some of it is profit. The principal is not taxed. That is your money, so you can take that money back out. But the profit is taxed under the capital gains tax ruling because it's an asset. You're required to report capital gains to your accountant. Really important to do that. Now, this is a great little video from one of my favorite guys, Kerry Packer, talking at a Senate inquiry about his business dealings. I hope you enjoyed this one.
What the Four Corners program suggested was not that you were evading tax at all, that would have been libelous, but that you were minimising tax.
There's nothing wrong with minimising tax. I don't know anybody who doesn't minimise their tax.
And that you were doing so in ways that were contrary to the spirit of the law.
Well, I just got through telling you what I thought about that. And what you're saying is exactly what the Four Corners program says. I am not evading tax in any way, shape or form. Now, of course I am minimising my tax, and if anybody in this country doesn't minimise their tax, they want their heads ripped. Because as a government, I can tell you, you're not spending it that well that we should be donating extra.
And we don't want you donating any extra either, so make sure you understand what taxation and get good tax advice. Some of the key things to remember are, what are your nominal tax rates? HODLing, holding onto the asset for longer than 12 months, gives you the capital gains tax discount. Don't ever sell large amounts of coins because, of course, if you sell large amounts, you're going to be affecting your nominal tax rates. Use a good accountant that understands assets and sales and cryptocurrency. use legal tax minimisation structures, and work within your risk profile, which could include just doing everything personally because you don't want the headache or the hassle, or putting in structures that minimise your tax. Your nominal tax rates are something to really consider. So whatever you earn in a year, you'll fall between one of 6 different tax groups. Under 18,000 at 0, 18 to 37 is 19%, 32%, 37%, and 45%. So wherever you are, wherever you're cashing in or liquidating some of your assets or converting assets to different classes, you will be affected by your nominal tax rate. Now, what's a good exit strategy? Number 1, use a good accountant. Report all your transactions, profit and losses. Pay only what you're obligated to pay, and you have to tell your accountant what you've done, and because of the capital gains discount, it may affect how much tax you have to pay. He probably won't be aware of it, or she may not be aware of it. You have to let them know. Minimise, don't avoid. And most of all, be transparent. Using an exchange that does have a downloadable CSV and a reporting process is always very, very good. Now, what the DACXI is different is very, very good. You know, it's very different to all other platforms that I've looked at. It's a retail investor specific platform. It's all easy to understand. It's designed for the retail investor. It's got really good admin support. It's actually got community support too. We've got a good community system that's up and running, and we do meetings and webinars and trainings and just general coffees and dinners all over Australia. The exchange is very simple to use, and next year, 2021, we're starting the individual crowd finance projects, which are going to be using the DAC coin to fund into those projects. All completely unique to other platforms that I've looked at so far. We have 9 different assets in our portfolio: that coin, gold, silver, and platinum, Bitcoin, Ethereum, Litecoin, and Bitcoin Cash, all the very good blue chip coins. And of course, your Aussie dollar is in there as well. The big difference that we have is we have an inbuilt accounting program that helps you account for all your assets, gives you your profit and loss for your accountants, as well as a downloadable transaction CSV file, which your accountant will require to do and complete your tax, whether it's personal, company, trust, or self-managed super fund. It's really important that the platform that you've got your coins stored on has got that capability, making your life easier and, of course, cheaper for your accountant and you to do your end-of-year tax obligations. Now, timing is really important in doing all of this stuff. We do know the trend for crypto is going up. We do know the trend for precious metals going up, and we do know that the DAC coin will be expanded in their platforms through 2021 and beyond. The time waits for no one. We are living through a very big disruption. So the bigger the disruption, the bigger the opportunity. The sooner you learn, the sooner you take action, the more profit you are going to create for yourself, your family, and your future. Thank you for being open to learning. Plan for the future, but take action now. If you want to go and find some more additional information, go to DACXI.com, DACXI Global Facebook pages, DACXI Global YouTube, or my website, allthingsrenewable.com.au. Thanks for your time. Looking forward to helping you on your learning journey, helping you understand crypto about more, and becoming financially free using a different asset than you know about now. Take care. Bye-bye.